Yo, what's poppin', man? OFX in the building. So, price action is the most important indicator that you'll ever have, right? There's nothing more important than it. And these indicators, man, there's over 100 of these, and then combined with all of these things over here that you can use, there's total over 150 of these indicators combined. So, but the crazy thing is a lot of people don't focus on price action, man. They think they need EMAs and SMAs and Fibonacci's and all this shit. You really don't need any of that stuff at all. You do not need any of it. The main thing you need to focus on is what price is telling you. It just makes sense to look at price structure and momentum and everything that goes on because it's telling you exactly what it wants to do. So in this trade, this 10-1 trade that you could have caught, if you look at overall structure of NU right now, very bullish, very, very bullish momentum, very, very bullish structure. Okay, higher highs and higher lows and everything. So when we go down to the lower time frames, we can see okay, we can see price has this level right here of support that's been touched 1, 2, 3, 4 times. Okay, price makes a huge drop, breaks this level of structure, and then comes back down to the level of support for the 5th touch. But look at the reaction that price has off of that support. Look at this strong ass reaction it has. Okay, majority of people are going to be looking at this level to sell and be like, okay, we'll price pull back and now we can continue lower. But the main thing that you got to notice is that price did not break below this support. If price would have broken below that, had a really strong closure, and then we had a pullback, it probably could have happened. But we had a really strong reaction off of the support. So that's the first thing that tells us that we're not going any lower. Second thing is what happens is price comes down and maintains this level. It doesn't break and create a lower low. It comes right here, creates a lower high, right? Starts maintaining. Price has a strong reaction. Then when it gets back down to here, look at how sales get really, really weak and choppy. And then price starts to level out and create another level of support, right? And then look what happens after. Price starts pushing up. We get this big engulfing, breaks this next piece of structure right here. So price has a strong reaction off the support, okay? And then comes back down and maintains this, creates a higher low. Boom, we're going bullish. And that's really as simple as it is. But people just don't pay attention to that stuff, and they need the indicators and all this and that. You don't need any of that. You need to pay attention to what price is actually showing you. So then what happens when it comes up here is we have this little level of resistance turn into support. And the cool thing is when it comes back down is you don't need to enter immediately. Since we had this strong push and we had a break of structure, you want to be a little bit more careful, and you don't need to enter immediately right when it gets back in here. What you want to do is you want to wait for a smaller time frame reaction and then the pullback and then the entry. So you want to see price what it did right here come back down to a level. You want to see a good solid reaction and then a pullback and then an entry, and that's it. That's what you want to see. You don't want to see it come back and then just enter straight off of it just because it's a break and retest, right? You want to see that reaction. So what happened if we go down to the 5-minute? Price came down to that level, and look what happened. Look at the reaction it got. Strong reaction, right? So then we want to catch that pullback and then buy, right? So what we had right here is we had a hidden demand zone on the 5-minute. On the 3-minute, it looked best. We had a demand zone on the 3-minute. So what we can see, look, we had that reaction. Demand zone was created, this candle. Price came back up into it, and then boom, entry, right? But we waited for that reaction. We want to see what is price going to do. If price just went straight through and just kept going, that's fine. That's great, cool, whatever. But look at the reaction they got. Pushed up, then a big engulfing, right? That wiped out these candles. Demand zone was created, so now we know, based off this reaction, now we know that we can see buys. Boom, entry, and then price went up. We took it up to this next level right here, and then that was it. But the whole reason why we were even looking at that is overall price was bullish overall, but that doesn't mean we can't catch sales in the smaller time frames, right? In the daily, yeah, it's bullish, but you can always catch sales on the lower time frames, of course. But price had a strong reaction, came back down, maintained, came back up, Then broke and retested that, had a good reaction on the smaller time frames, and then that pullback and then the entry, and then a 10-1. And that was it. So we don't need any of these. Price action is the most important indicator that you'll ever need. You don't need any of these, whatever the fuck these are. I don't even know what these are. But you don't need any of those. And you can catch every single trade. You can make a lot of money. You can get really, really good risk rewards, really good risk management, all that stuff. And yeah, so that's it, man. OFX out.